morning once again, ladies and gentlemen, and welcome to Stanbic Investment Management Services Clients Webinar. We hope that you would leave with more questions answered as you gave us the feedback from our last webinar. You wanted to engage us much more. This morning, we are going to talk on navigating your SIMS collective investment schemes. And before we jump into that, I would call in my Managing Director for Stanbic Investment Management Services in the person of Kwabna Boama to set the tone. So over to you.
Thank you very much, Miriam, and the team for putting this together. We're living to our promise to engage you, our cherished clients, more and more. And I'm particularly excited that we've come back to you again. To borrow the words of Benjamin Franklin, he says that an investment in knowledge pays the best interest. And I believe that this opportunity that we have to engage with you provides that platform where we can educate ourselves around the investments we have chosen, and then also understand the risk and the rewards of the journeys that we are making as far as our investments are concerned. I would want to end by commending you all for making good to your financial goals that you started at the beginning of the year and sticking with us. I know some of you might have crossed your first 1 million, others may have crossed their 5 or 10 million. Others may have well also hit their first 100,000. And I want to say thank you to you all for keeping true to your financial goals and also choosing Stanbic Investment Management Services as your partner for your wealth journey. Thank you and welcome once again to the SIMS webinar. Back to you, Miriam.
Thank you very much. As we affectionately call him, Kwabna Boama KB. Thank you very much for sharing your thoughts. And thank you all for being online. I see a lot of people sending in that they cannot hear us. What I would ask of you is to unmute the broadcast. Once you do that, I'm sure you can hear us. So please unmute the broadcast. There's a tab at the top saying unmute broadcast. Once you do that, I'm sure you would hear us. If you can hear me, please give me a wave in the chat box. If you can hear me and you're looking forward to learn something today about your investments and how to make sure you meet your investment objectives by the end of the year, if you're not too late for that. Okay, I see Sedi in the chat with a wave. Thank you, Dixon Somwa. Thank you, Regina Abla. Thank you, Hansen, Frank, Mame, Adoma, Queen, Benjamin. Awesome. Thank you so much. I see that you can hear me now. Awesome. Agatha, King Logic. Great, great. So we are ready. We have 363 people online. We are expecting much more, but we will start because some of you joined in right on time at 10 a.m. So we will start the session this morning. This morning, our engagement is designed to ensure that you fully understand the changes that are happening on your collective investment scheme. So our presentation will take you on a journey and tell you where we are getting to as well, so that you can take advantage of all the benefits that are in there for you. So without talking much, I would bring in the head of client coverage in the person of Desmond Bredu, who will take us through the presentation, and we would give much more time to you also to ask all the questions, the burning questions you have surrounding your investment, how to transact and all of that. So Desmond, please, your audience.
Thank you very much, Miriam, and thank you to everybody for joining in. So today, I'll be speaking on navigating our collective investment schemes. And like Miriam rightly mentioned, I'll take you through a bit of introduction, and then I'll journey with you of where we've come from and where we are looking at getting to. And so I'll be sharing some slides with you as we go along this journey. So please follow with me as we go through this. So I want to begin by just briefly highlighting what this year has been in terms of our mutual funds that we have. So our Stanbic Income Fund Trust, or the SIFT main, which we recently reopened on 8th September, has done really well, quite strongly in terms of the returns. This year to date, it has done around 31%, which is quite good and quite strong in terms of returns. If you look at the other fund that we have, which is a Stanbic Cash Trust, through your support, we've gained over 1.2 billion in assets. And so thank you so much for trusting in us. We've done about 14.5% in year to date in terms of returns. So thank you so much for sticking with us. And the graphs on the screen show you if you had invested in December 2022, up to date, what would the return have been and what would have been your money. So 1,000 cedis invested as at December 2022 would have been 1,687 as at October of this year. So again, it shows the strength and the deliverables that we've done for you this year. This year as well, we've seen some really good economic numbers come through. We've seen even inflation drop from highs to around 8%. And we've also seen some really strong government policies in terms of driving interest rates down. And so if you look at on the graph, we've come from a period of around 39% as somewhere 2022 December to around 16% and dropping. I mean, for you and I, you ask, so what does that mean for me? Because that's the most important question. Before I come to what it means to you, it's important to know that there's an inverse relationship between interest rates and bond prices. And so as interest rates are going down, the bond prices are also rising and becoming more attractive for people to invest in them. And so if you can see on the graph, as interest rates have been declining, bond prices have been also improving. For you that have investment in our Stanbic Income Fund main and Stanbic Cash Trust main, you'd have seen some recovery in terms of the values. If you remember, maybe a couple of years ago, if you're doing a withdrawal, you probably would have had a 30% or 35% discount or loss on your investment. We've seen some improvements to even be below 10% as of now, but like we always say, we can't always predict it. But based on current trajectory, we are really confident of the future and how the market will recover in due time. But like I said, we've seen some really strong recovery this year as well. So in simple terms, just to practicalize this for you, let me just show you how, if for example, you invested in our SIFT main a year ago with 100,000 cedis. At that time, like I said, the bond prices was really low. And so at that time, the average bond price was around 68.8%. And so for 100,000 cedis that you invested with us, you'd have gotten an amortized value the following day of about 137,000 cedis. But the mark to market is around 100,000 cedis. It's important to also highlight that. A year on, following the previous slide I showed you, with respect to the recovery that we've seen on the bond market, that 100,000, even in terms of the mark to market, is around 138,000, even when your amortized shows about 151,000. So really strong returns, really good returns that we've delivered over the year. It's also really important to highlight that for clients who are looking at withdrawing, what you would get paid is the mark-to-market value, not the amortized value, if you have investment in our SIFT main and Cash Trust main. So like I mentioned, really this webinar is just to give you an indication of where we've come from, where we've journeyed from over the past 3-4 years, and where we intend going to in the next couple of months and years as well. For some of you, you definitely remember somewhere in October of 2022 when our regulator, which is the Securities and Exchange Commission, directed us that we need to enforce or value our securities using a mark-to-market valuation. And so to sort of protect clients who are bringing in new money, we created the subclass funds, which we call the AMC, somewhere in December 2022. and that's been operational since then. We also saw that in 2023, we had DDP come through and even sort of deepened or worsened the losses that clients were facing when they were doing liquidations from their main income fund and their cash trust. So what we sought to do at that time was to update our withdrawal process. And so for any withdrawal that you put through, we will then send you an email confirmation to say that this is the amortized value and this is the mark-to-market value. And so should you go ahead with the withdrawal or otherwise? And so we did that process update somewhere in 2023, first or second quarter. We also introduced our app, the SIMS Limited app, and I would encourage you, if you are new to this, to please download the SIMS Limited app on the Play Store, on iOS Store. It's a really good way to transact, to deposit, to withdraw, to even monitor your investment. It's a really good platform to have as well. We also have our self-service portal, which also does the same functionalities as well. Somewhere in August of this year, we indicated to our clients that we will no longer be accepting deposits into the Stanbic Income Fund Trust AMC, basically because it was operating like the Cash Trust AMC. We directed clients who had short-term investment needs to consider the Stanbic Cash Trust AMC, other than the Stanbic Income Fund AMC. What we also did is that we knew that clients had long-term ambitions or long-term financial goals. And so we reopened the Stanbic Income Fund main, the SIFT main, on September 8th, 2025, to allow for deposit. It's also really important to highlight that for the SIFT main, it's a long-term fund, and each deposit has to stay for a minimum of 2 years to avoid the exit fees. And so we did all of those realignments this year just to give our client product clarity, in that if you want a short-term investment, consider the Stanbic Cash Trust AMC, and if you wanted a long-term investment, you consider the Stanbic Income Fund Trust main as well. So that is basically where we've come from. It's also really important to highlight that even in that time as well, we had a bit of changes with respect to our statement. And so previously, before the whole mark-to-market situation, if you look at our statement and on the graph, on the picture I'm showing you on the top side of the screen, where I've labeled as old, we used to just have your deposits, your withdrawals, and your market value. So after these changes, what we currently have is that we now have the mark-to-market prices of the SIFT main and the income fund main, and which is the red, what I've shaded for you as red. Because clients wanted to know how much, if they wanted to withdraw their monies, they would be getting, we introduced the mark-to-market prices on the statement. And so for clients who wanted to know their returns, or they wanted to know their current values, what we told them was to multiply their mark-to-market units times the number of units that they had to get an estimate of what that value looks like. It's really important to highlight that we had a number of clients come to us and saying that that whole process or that whole mathematics is a bit cumbersome for us to do. And so they wanted a way that they could easily see their current values on their statement, especially for the Stanbic Cash Trust main and the Stanbic Income Fund main as well. And so we've listened to you, and so we've looked ahead with confidence in terms of our next steps, what we intend to do over the coming months and the coming years as well. And so this last quarter of the year, we are looking at some digital transformations, and I'll show you exactly what that means in the next slide or two. But we'll have some updates to the SIMS app. We also have some updates to our self-service and other digital platforms that we currently have as well. And it's really important that this part of the presentation is really sort of taken care of, because it is a really important point that we want to highlight for our client. And I'll come back to this slide when I finish a few slides, and I'll come back to this particular slide. So this is the meat of the conversation, in my opinion. We've listened to our clients, we've listened to you, especially those of us who had monies in the Stanbic Cash Trust main and the Stanbic Income Fund main, in terms of you wanting to see your mark-to-market value. And so in the last quarter of the year, we are working on showing you the mark-to-market value of your investment on the statement. And so once you finish these changes, when you go to your statement and you see on the bottom part of the screen, for the Stanbic Cash Trust main and the Stanbic Income Fund main, you see your mark-to-market value also showing on your statement. For the Stanbic Cash Trust AMC and the Stanbic Income Fund AMC, nothing changes because your amortized cost or amortized value is the same or will be the same as the mark-to-market value. That is for the AMCs. But for the Stanbic Cash Trust main and Stanbic Income Fund main, because of where we are currently in terms of the recovery, you would see a dip in the value or a drop in the value of your investment in terms of the mark-to-market value. So for instance, if you can look at the Stanbic Cash Trust that I'm currently highlighting on the screen, the amortized value is around 409.5 cedis. But after this change as well, you see the corresponding mark-to-market value of this particular client statement around, say, 378 cedis. What I've explained to you previously is saying that based on how market has been, we've seen some recovery. Like I mentioned it previously, about 2 years ago, if you're doing a withdrawal, you'd have probably suffered a 30% loss. Now things are improving. It's around 10%, 11% thereabout. So we expect things to improve as we go along the year. But it's also really important to also highlight that for the Cash Trust AMC and the Income Fund AMC, your amortized cost will be the same as your mark-to-market value, and that has not changed. It's also really important to highlight that we'll also be making some updates on our SIMS app. Now, currently, if you look at the SIMS app, what you see on your balance is the amortized value. When you finish these changes, you see the mark-to-market value instead. We know that for some clients, if, for example, they have 21,000 on Monday and they wake up on Tuesday to check their balance and it's 19,000, they may panic. And that's why it's really important for us to have this webinar to educate you about it. But what's also really important is that you'll be able to download your statement from the app. And so at every point in time, you'll be able to see both your mark-to-market value and your amortized value when you download your statement. But for the SIMS app and the digital platforms, what you'll be seeing is the mark-to-market value. And so if you want to see both, please download or generate your statement from the SIMS app. You can go to the particular account that you have and you generate your statement and you go into your email for you to look at. It's really important we highlight it. So the two main changes is that firstly, we are looking at or we'll be introducing the mark-to-market value of your investment in the Stanbic Cash Trust and Stanbic Income Fund on the statement. The second change is that on our digital platforms and on the app, you would now be seeing your mark-to-market values on those platforms. If you want to have both, we strongly encourage you to download your statement, and you can do that on the app and on our self-service platforms, and you're able to see both your amortized value and your mark-to-market value. Now, I did mention that I'll go back to the previous slide in terms of the changes. And so for a period, in terms of after these changes, clients who put in a withdrawal request, whatever they see is what they'll be getting at redemption. We also would like clients also to know that most often than not, we encourage clients to do withdrawals early so that we can process for them on the same day. If it goes to the following day and the prices change, then we'll come to the confirmation, so we'll send you a confirmation. And we'll be doing that for a particular period, just to handhold our clients throughout this journey. But after a particular point in time, the confirmations will stop because we want clients to be aware that the mark-to-market on the main fund is how we per regulations and per standard, we are supposed to operate. And so for a period, we'll be hand-holding you throughout this journey, and summer 2026, if the mark-to-market range is below 5% or the change is more than 5%, we'll then come to you for confirmation. If not, we'll process the withdrawals for you. For us, the key thing is that we want to improve our turnaround times for our clients. We don't have a situation where when you send a withdrawal, we have to come back to you for a confirmation before we pay you. Once you see the value you have, we'll be able to make the decision whether to withdraw or stay invested. So again, the key things to remember, like I mentioned, the first thing is that your experience matters to us. We've heard you. We'll be showing you the values on your statement. For for our app and digital platforms, you would only see your mark-to-market values. And it's also really important to highlight that these changes does not include, or the SIFT AMC and cash trust AMC are not part of these changes. It's really important to also highlight that as well. So Miriam, that is what I have for our cherished clients today. If you have any questions or comments, we are more than happy to have them and then answer them accordingly. We'll definitely also ask for your feedback. Miriam, I think you would handle all those parts as well. So thank you so much for hearing me and listening to me as well. Thank you.
Okay. Thank you very much. I warned Desmond that this should end by 10:30 so that we can ask all the questions that you have put in the chat area for us. And so thank you, Desmond. You did very, very well, and ending at 10:28. Awesome. I see a lot of questions in there. We are going to attempt to respond to as many as we can before we sign out. But we have our reps also in the chat area responding to some of the information or questions that you have asked. We will attempt to answer all questions that you have given us today before we sign out. So I'm going to pick up some of the questions that we have gotten in, and I have Brenda Kisi also joining us, the head of portfolio management, who will join us in answering all the present questions that you have. Welcome, Brenda. So I'll go with the, forgive me, I'll go with the first question from Benjakin. Please, a major question is at the end of the year. There are changes. Is it on profits accrued or entire investment amounts? Some amount to 2% plus. Please clarify. So he says, a major question, it's a major question for Benjamin. At the end of the year, there are changes. Is it on profits accrued? There are charges, sorry. There are charges. Is it on profits accrued or entire investment amount? Some amount to 2% plus. Please clarify.
So there's no end of year charges on your account. I'm pretty sure what it's referring to is the withdrawal charges on Stanbic Income Fund Trust. So, like I mentioned, for the Stanbic Income Fund Trust, or SIFT, every deposit has to stay invested for a minimum of 2 years if you want to avoid the exit fees. Now, assuming you want to withdraw in the first year, there's a 2% withdrawal charge on the amount you are withdrawing. So whether it is on interest or on the principal, it's on the total amount you are withdrawing. Now, assuming you've invested for, let's say, a year already, that charge becomes 1%. And so that is also really important to know on that. So there's no end of year charges per se. It's on the income fund if you are withdrawing before the 2-year mark. So it's really important to know that each deposit in the Stanbic Income Fund Trust that we just reopened in September has to stay for a minimum of 2 years. Yeah.
Okay, thank you. Benjamin, I hope that answers your question. So I see from Benjamin, another Benjamin, looks like I have a thing for Benjamin. Please, till now, I can't see the deposit aspect on my SIFT AMC. Till now, I can't see the deposit aspect on my SIFT AMC.
All right, thank you. So I think we highlighted that we've done some CIS alignments this year, and the SIFT AMC is no longer accepting deposits. And we communicated this to our clients on 8th of August. The rationale is that we had 2 AMC subclasses, which is the Cash Trust AMC and the SIFT AMC, and both of them were money market investment. We wanted to clearly differentiate our products and solutions, and so we stopped taking new deposits into the Stanbic Income Fund Trust AMC. We told clients that if you have a short-term objective, please consider the Stanbic Cash Trust AMC. Now, because we knew that clients will also have long-term objectives, we then reopened the Stanbic Income Fund Trust main, which, I mean the old one in quotes, which has the bonds in them for people who have long-term ambitions. And like I've already mentioned, It's a long-term fund, and every deposit has to stay invested for a minimum of 2 years to avoid exit fees. Thank you, Miriam.
Okay. Charles is asking, when are you going to accept deposits in the Stanbic Income Fund Trust, which is the SIFT? When are you going to accept deposits into the Stanbic Income Fund Trust? Brenda?
So the Stanbic Income Fund Trust, which is the main fund, is currently accepting deposits. So you can do a deposit into the main fund.
Just to also add that for clients who did not have the SIFT previously, when you go to your app, you currently not see it. And so we encourage you, if you don't have it on your app, to use our self-service link. The SIMS rep will post the link in the chat. You can deposit in there, and once you do, it will now reflect on your app. So it's another thing to also add, that if you don't have it, please use the self-service link to deposit. That's if you're interested in a SIFT, and then you to reflect now on your app. Thank you.
Okay, so I see LS is asking, why do you charge on deposits? Why do you charge on deposits? So I would like you to handle the charges for me. Let's look at the charges, and then let's look at the management fees. What's the distinction between that, and then help clarify for clients why the charges, what the charges are, and then the management fees as well.
So I'll probably handle the charges, and Brenda will handle the management fees. So, so for depositing, the platform that we use, we don't charge front load fees, but sometimes the banking institutions would then charge you for using their platform, or for example, their Visa card. So none of these charges comes to SIMS. It oftentimes has to do the bank that you are dealing with. In terms of the other charges, I've already explained the exit fees, which only applies to Stanbic Income Fund Trust. For the Cash Trust AMC, there is no exit fees on that one. Brenda.
Great, thanks, Desmond. In terms of management fees, so for the income fund, a management fee is 2.25% on assets under management, but there's also a 0.2% as fees for trustees services. And on the cash trust, the management fee is 2.25% of assets under management, then a 0.4% for trustee services.
Okay, I hope this clarifies it for you. I see in the chat as well, one of our reps has responded to that. So just in case you missed that, please check the chat area. There's a question from Mame Adoma, and she's asking, can you recap on the mark-to-market and amortization values for the, she said thread products. I'm not too sure, but once we're talking about the mark-to-market and amortization, maybe you can go to the slide that you explained about what you see in terms of mark-to-market and the amortization. Yes.
Okay, brilliant. Thank you, Mami. So currently, for clients who are even depositing into the SIFT main, the balance that we are showing is the amortized values. Now, if you look at the screen, because, like I've already explained earlier, the bond prices about a year ago were low, assuming we brought in, say, 100,000, the following day, you see a significant jump in your amortized value. So in this case, the following day on your statement, you probably see 137,000 CDs, with the 37,000 being your interest. But remember that that is only the amortized value, basically because the bond prices at that time had significantly dropped. But of course, your mark-to-market value of the following day is only about 100,748, which actually represents your true value. Now, what's happening is that a year on, because bond prices have recovered, the value of your investment would have grown from the 100,000 to 138,000 being your actual mark-to-market value. But again, because there's a disparity between where bond prices should be and where it's currently at, that's the difference between the 151 and the 138,000. Now the thing is, we hope that the bond market continues to recover. Then we should see a narrowing of the 151 to the 138 so that you can recover fully on that. But actually, your actual value as of now will be 138,000, and that's what if you want a withdrawal, you'll be paid out on. Thank you.
Awesome. Thank you, Desmond. I want to go to this question. Brenda, I'll give that one to you. Desmond Dodu says that, please, when is this mark-to-market value going to go away? When?
Thanks, Miriam. So mark-to-market, like has been explained, is a reflection of what the market is doing on your portfolio. The market is driven by some progress we make in the economy. When the economy is not doing well, you'd find that prices of bonds, that's long-term securities, are also not doing well. So there's a direct correlation between the economy and the issued in the economy. We are coming from a hard or difficult economy from 2020, that's the COVID. We ran into 2022, still feeling the ramifications of the COVID-19. Then there was the need to do a mark-to-market valuation so we could have all clients treated fairly in terms of investment pricing. There's an instance where you would not see a loss on your portfolio or on your redemption whenever you do a request. And that instance is when bond prices do well. When bond prices are issued, they are issued at a price of 100 cedis. But currently, if you check what bond prices are doing in terms of your holdings, the holdings in cash trust and income fund, bond prices are doing around the 83 cedis to the 91 cedis. Ordinarily, it should be at 100. So far as these pricing remains, you're going to see a differential between your amortized cost and your mark-to-market cost. When the market is showing pricing of 100, then there are chances you may not suffer any loss anytime you want to withdraw. So we are praying that the economy continues to follow on the good path that we have seen so far. And hopefully bond prices should pick up and we should see a direct reflection of that in your portfolio or on your investment account.
Awesome, thank you. I hope this answers your question as well for Patrick Dako Ejekum. You wanted to know if the haircut on your investment is over now. So haircut, mark-to-market losses, whether it's over or not, I believe that Brenda's response has clarified that for us. Timmy says each deposit into SIF needs 2 years period. If I'm contributing monthly, how does that work when I want to withdraw, let's say 2 years after the first deposit? Should I take it again?
No, I understand the question. So, what's her name again?
Timmy.
Timmy. Okay, so if it's a male, sorry. So, like we've said, each deposit has to stay for 2 years. So let's use practical examples. Assuming you deposit on 1st of January 2025, that deposit would have to stay until January 2027. If you deposit on February 1st, 2025, that also has to stay till February 2027, so 2 years. Now, our system is configured such that we do first in, first out. And so, for example, you bring in 100 cedis in January 2025, and it's 2027 January, and you want to redeem, say, 100 cedis. Our system will first pick the first money that you brought in. If that has crossed 2 years, there will be no exit fees charged to you. But assuming that the amount is more than your first or second deposit, then it will then charge you on the remaining balance. So we do a first in, first out system that we currently operate. So each deposit, 2 years, our system is configured to pick when the monies came in, and the appropriate charge will be passed if it needs to be. Thank you.
Awesome. So I see another question from Benjamin. He said it remained unanswered. That can you please clarify these fees stated under the Stanbic Cash Trust AMC, and it is on the compound, and whether it's on the compounded or the principal. Annual management fee 2.25% per annum and trustee fee 0.4% per annum. So Brenda, you take that. Okay.
Yeah. So in the world over, when you look at collective investment schemes or mutual funds, the fees, the applicable fees actually goes into the assets under management, where assets under management here means your initial investment and your accrued interest on a daily basis. So on a daily basis, your investment plus anything that has been accrued, the fees of the 2.25 and the 0.4 is prorated on a daily basis and applied. This is done so that anyone who wants to exit would exit with a portion of fees paid and not exit and leave the rest of the fees for the other unit holders remaining in the fund. So on a daily basis, fees are accrued and charged. So the fees that have been stated, like you have confirmed, is on the assets under management, which makes up of your initial investment and interest accrued.
Just to add up that, you won't see, for example, unlike the SIFT, you won't see that you have 100,000 and we are taking 2% out as management fee. It's part of the daily computation, so you won't see a different line. If we are talking about the exit fees on SIFT main, that's a different conversation. But in terms of the management fees, it's part of the daily process that we do, and so you won't see a different line when it comes to redemptions.
Okay. There's a question here about the macroeconomy, so I was expecting it to come given that the budget has been read. So Dennis Asamoah is asking, looking at the current macroeconomic trends in our economy, do you have any impact on the investment opportunities and risk? And if yes, how do you intend to manage it? We have our portfolio manager here, so that should directly go to you. Would you want me to read it again?
Yes.
Okay. So looking at the current macroeconomic trends in our economy, does it have any impact on the investment opportunities and risk? And if yes, how do you intend to manage it?
Thank you, Miriam. So whatever happens in the macroeconomy has a direct impact on your fund or on your investment. Coming from COVID or coming from 2022, we have seen that the economy continued to improve. Especially this year, we have seen some macroeconomic figures improve. And we have also seen that inflation has drastically come down from a high of about 28% to currently an 8%. We've also seen that interest rates have also come down. That is the cost of borrowing for government in the capital market. What that means is that because your fund is invested in local securities, any interest rate has a direct impact on your fund. Because the trend in interest rates have reduced, we are seeing reduced returns on your fund as we speak. But in terms of risk, what we have done is to mitigate the downside risk to your fund, i.e., before we do any investment, we look at what the likely risks are and we try to reduce the impact of that risk. Luckily, these funds that you invest in have an investment mandate that is clear. Basically, it tells us what we can invest, how much we can invest, what exposure we can have to a particular investment, etc. So we are guided by the investment mandate on both schemes, and there's no point in time that we would want to go outside the mandate without approval from the regulators or from your group cells during an annual general meeting. So the investment mandate, number one, contains any risk that the fund will take, and number two, based on our expertise, we are also able to mitigate some of the risk on your fund.
Just to add that it's really important that as clients as well, on a monthly basis, you also check our website. We publish the fact sheets of our funds. And so the fact sheet also detail what we've invested your monies in, the underlying counterparties. We also give you a view of where we think interest rates and general economic numbers are going. So we do this on a monthly basis. And so we encourage clients to, on a monthly basis, please go to the SIMS website and look for the fact sheet. What we've also done is that we also be sending you monthly bulletins just to give you an indication of what is really happening around. So please also be expecting that if you've not received that previously. Thank you.
Awesome. Desmond, this would go to you. So there's a question that what is the minimum amount to invest in S&P 500? If we do not invest in that, what foreign investments do we invest in aside what well, it didn't finish. Aside that, and what are the terms?
Okay, awesome. So our current collective investment schemes that we have are CD denominated instruments, and so we do not have any S&P 500 investment in them. What we, aside our normal or our collective investment schemes, we also distribute 3 funds, global funds in Ghana, which are USD dominated. The first one is Melville Douglas Global Equity Fund, which invests in global stocks like your Amazons, like your Nvidias, and the Apples and whatnot. We also have another fund which we call the Melville Douglas Bond Fund, which invests in treasuries and supranational bonds as well. And we also have a balanced fund or a global growth fund, which has both the equity and the bond. Key things to note about the fund is that because it's in global markets, you need to have a bit more risk appetite if you want to partake in these offerings. The minimum amount to invest is 2,500 USD, and then we'll take you through a bit of KYC, and we would have to then onboard you locally and internationally as well. So you need to demonstrate your proof of funds, and actually you are having to have a dollar bank statement to back the monies that you're actually wanting to transfer offshore. And most often than not, you need to have an offshore bank account sort of back it as well. So yes, in summary, we have dollar denominated investments, which are called Melville Douglas Global Equity, Melville Douglas Global Growth, and Melville Douglas Balance Fund as well. So we're happy to talk to you about it if you're interested, but you need to have a medium to high risk tolerance to partake in these. Thank you.
All right, thank you, Desmond. And I see the feedback coming through from Sedi and Emmanuel. Good presentation. Listening to what the lady explained on the mark-to-market, my money in cash trust should have improved from last year, but my money has rather dropped. Why is that? I have records to show that. So Sedi is saying that listening to what you explained, her money in cash trust should have improved from last year, but the money has rather dropped. Why is that? And she has records to show that.
No, I don't think that should be the case. So even whilst the money is still in the cash trust, it still earns interest on a daily basis. And like we've already highlighted, we have even experienced an improvement in the mark-to-market values. And so, for example, assuming you had 100,000 cedis a year ago, and you wanted to redeem, you probably would have gotten, say, 80,000 cedis. Now you're getting around 92,000, but it's not a fixed thing. So Sedinam, I think that maybe after this webinar, please get in touch with us through the SIMS customer service. You can send in the proofs, we'll investigate and get back to you. But definitely, there's been an improvement in the cash trust and even in the income fund as well. Thank you.
Thank you. Sedi says this has been a good session though, so even with her questions, she's enjoyed the session. And Esther says she has a lot of learning to do on her accounts, but she's grateful for the transparency this has brought her. Okay. Esther also says, I haven't really been following my account because I was away, but will follow and monitor now. Thank you, team. Thank you, Esther, as well. If you want to monitor your account, we have made that very easy for you. You can go to any of the app stores, iOS or Play Store, to download SIMS Limited, SIMS Limited, and you, with your client ID, you will be able to access all your accounts and see what is going on there. If you join the app and you realize that you are not able to view any of your accounts, or it mentions that it is unauthorized, it only means that there is some update that is required on your account, as we currently accept the Ghana card for all your transactions, and probably that is what needs to be updated, or a missing phone number or account number. And that has also been made easy for you. You can simply go to the SIMS self-service. You can Google SIMS self-service and you would get the link to update any of the information that is required. You will get a response to let you know that it is updated or otherwise, and then you can transact. So to do a withdrawal, to deposit into your account, we've made that very easy for you. The SIMS self-service is available. The SIMS portal, which most of you already know, is still available, and also the app has been introduced. Also, for Stanbic account holders, you can actually also deposit or withdraw from your account using your Stanbic Bank app. Just slide all the tiles to the very end and you see Stanbic Investments over there. There's also the Stanbic Pay portal or payment portal that allows those using third-party banks to use their cards to also make deposits. I'll go to a few more questions before, and I'm sure that we would have answered most of the questions. Some of the questions are also linked, so I may not read out your question, but I'm very certain it has been responded to in the chat or is linked to one of the questions that I read out. Okay. So Phoebe Labi is asking, is it possible to transfer your funds from cash trust to a long-term investment? Is it possible to transfer your funds from cash trust to a long-term investment? I think Desmond, you take that.
Yes, it is possible to transfer your funds from cash trust to the Stanbic Income Fund Trust if it aligns with your objectives. And we've already highlighted that every deposit in Stanbic Income Fund Trust has to stay invested for a minimum of 2 years if you want to avoid exit fees. Also important to know that the SIFT is marked to market, so there's no fluctuation of volatility in that fund. So have medium risk tolerance and have a long-term perspective before you move your money from the cash trust into the income fund trust. Thank you.
Thank you, Desmond. I saw a question from Esiedua. Esiedua is asking, will you add the SIFT main on the SIMS app? Yes, we would add it, and we actually have. If you can't see it yet, please update your app again, and you should see it showing on the tabs that are existing already. So you can add on to the SIFT main if you don't have it already. So that's from Esiedua. Rhoda Obain says, do you have plans of getting listed on the exchange?
For the mutual fund.
So I'm going to, Rhoda, if you can ask the question again, because the panel is asking whether the funds or the company. We want to know whether it's the company you want to, so that you have a share in SIMS. And that's not a bad idea. You see good prospects for the company, so you want to be a part of it. Is it possible to convert? I think I've read Clifford, my earlier question, is it possible to convert my income fund to cash trust, vice versa? So
yes,
you can answer.
Yeah. But it will definitely go at the mark-to-market value at the time of the withdrawal.
Please,
to preempt Rhoda's question, so we currently, the two funds do not have securities that are listed on the exchange. What is listed on the exchange are mostly equity, or what we call shares. The funds, both funds are fixed income funds. So we have a long term and the money market. We do not have any equity holdings in both funds. So we are not listed. The fund is not, or the fund doesn't have any security that's listed on the Ghana Stock Exchange.
Okay. Thank you. So I'm going to have to read out Ethel's message. She's come back to say we haven't answered her question. She says, "Hello, my name is Ajua. I would like to know if the mark-to-market value is sent via text. Also, what does SCT, AMC, and SCT mean? And what is the difference between them?" So he wants to know whether the mark-to-market value is sent via text. So mark-to-market is MTM. Now you can use the acronyms. MTM is mark-to-market. CIS is collective investment scheme. SCT, AMC, and then SCT. What do they mean, and what is the difference between the two of them?
Okay. So the mark-to-market is usually sent via email. And we do have some clients, however, who may not have email. So sometimes we do it through a recorded line. And so if you don't have an email, you can get in touch with us, and then or we would get in touch with you through a recorded line and let you know. In terms of the two things you mentioned, so the SCT is the acronym for Stanbic Cash Trust, the money market fund. The AMC is an acronym that we just use for amortized cost. And this is the subclass we created following or after December 2022. The SCT main is the fund that we had before we created the subclass, and that fund has the bond holding and it's marked to market. But the cash trust, or the SCT AMC, is a money market fund which is amortized. Thank you.
Okay, thank you very much. What is the mark to market value now? You mentioned that it changes.
It changes, yes.
Yes. So the mark-to-market value changes. I wouldn't want to say volatile, but at every point in time, based on the activity on the capital market, we see your mark-to-market value changing. As at yesterday, the bond price for the bonds we hold in the portfolio, we're trading at 83 cedis and about 92 cedis. This is far from 100 cedis that would equal your amortized cost. And if you had come for a withdrawal request, the losses you would be seeing on your request would be between 9 to 10% for both of the funds. And you'd recognize that we have come a long way from the 35% discount to now the 5 to 10%, depending on the pricing on the capital market.
Okay. Also to add that you can always download your statements to see the price, the current price of the funds. Once you download the statement, you see the price, and then you see the mark-to-market value as we are moving forward. So reiterating what Desmond mentioned, going forward, you would now see the mark-to-market value on the app. But when you download your statement, whether it's via the portal or on the SIMS app, you can also download your statement. It will be sent directly to your email. You would see the value over there. On our website as well, the daily prices are put up, so you would see what price each fund is doing at what time. Okay, I saw a question here. Kindly explain in simple terms or to a layman mark-to-market value.
Yeah,
Don't use any financial jargons.
Our
Just to a simple break it down.
So I'll start, then Brenda can add up. So let's use this phone as props for now. And let's think of this phone as the bond that you have. So assuming I bought this phone for say 100 cedis, and today Apple releases a new or latest models of these phones, and much better computing, whatever it is. And so the value of this phone actually is no more 100 cedis. People are now willing to buy this phone for 70 cedis. So even though I bought it for 100 cedis, the prices or what people are willing to buy this phone for is 80 cedis. And that's simply what we call mark to market. So to translate it to technical terms, the bonds that you will hold, even though it's 100 cedis, like Brenda mentioned, if you want to go and sell it on the market, people are offering you between 83 cedis to 90 cedis to buy the same bond from you. And so in simple terms, mark to market is simply what somebody else on the market is willing to offer you the price of what you actually hold with you, or the security that you hold with you. I hope I did it in simple terms.
Brenda, do you think that was simple?
I think it was very simplistic.
Please, if you think that explanation of mark to market was simple, kindly give us your feedback in the comment section so that we know that we are breaking it down. There was a question asking if the recording will be available after and whether slides will be available after. Yes, we would make that available. We would also put together the highlights from the webinar and a few questions that you have put together, and we will send it to you. So if you haven't updated your email address, this is the time to do so. I believe the self-service link has been shared. You can click on that link and update your contact details, because that's the way we reach you, whether it's your statement or it's any other information that you need. Please update your contact details, and all this information would be shared with you. I'm being accused that I'm calling out only female names. But I started with Benjamin's and Desmond's. So let me look for a male name. George Mana Jr. says, can you explain this? The fund, oh, she keeps moving. The fund is no longer taking new deposits for liquidity and short-term investment needs. We recommend SCT-AMC. And this phrase or sentence is actually on the app. So he's picked it up from the app and he says we should explain it to him. So please go ahead, Desmond.
Okay, so like we mentioned, like I mentioned earlier on 8th of August, we wrote to our clients and also sent the messages that the Cash Trust AMC and the Stanbic Income Fund AMC are both money market securities or money market funds. And we wanted to clearly distinguish between the short-term fund and the long-term fund. And so we decided to no longer accept new deposits into the Stanbic Income Fund Trust AMC or the SIFT AMC. I mean, and the message is saying that if you're looking for a short-term solution, consider the Cash Trust AMC instead, because both of them were money market investments. And that's the simple terms for the message. Consider the Cash Trust AMC if you have that, because we are no longer taking new money into SIFT AMC. No. Just to add that it does not mean that the fund is closed. We are actively managing, we are actively investing in the SIFT or for the SIFT AMC, but you no longer just be able to top up as well. That's all.
Awesome. So Desmond, feedback for you is that that was simple enough. The mark to market is understandable. So now when we say mark to market, all our clients who will listen to the recording after would also appreciate it. Okay, so the explanation of MTM is very clear. Okay, so yes, there's a follow-up. I'll be accused again of calling a female. So this one was Desmond's choice. It wasn't mine. And it's from Priscilla. It says, per Desmond's explanation of the MTM, does it mean the price can go up to? Yes. Can you sell the fund at a higher price than what you purchased it for?
Yes. So the market actually feeds on demand and supply. So the bonds we are holding in the fund, let's say the investor sentiment in Ghana has really shot out of the roof, and we are currently seeing that our credit rating has also improved. That is to say that we are expecting a lot of investors to play in our market. And when our macroeconomic situation improves, we see that a lot of investors will find safety and a lot of returns of value in our bonds. When that happens, you see demand shooting up and supply remaining the same if government doesn't issue extra bonds. When that happens, you see that the price, which was originally issued at 100, that went down to a 30, went down to a 40, 70, etc., would now also shoot outside of 100. So you could see a 105, 120, 130. That is where we are looking at getting into. When that happens, your statement or your value of investment also shoots up to the extent that although you are marking to market, anytime you're asking for a withdrawal, you get a bit more than what is currently showing on your amortized cost. So that is where we are looking at getting to, and that would be a very pleasant sight to behold when that happens.
Awesome. Awesome. Anything to add? You're fine. Okay, Ephraim, since the SIFT main account is for medium and long-term period, say 2 to 3 years, does it mean that you cannot make withdrawal in any time unless your first amount invested hit 2 years and above?
Just to clarify again, that the income fund or the Stanbic Income Fund Trust, it is not, the 2 years is not on the account. The 2 years is on the deposit. So if you put in money today, that has to travel for 2 years. If 6 months time, you put in another deposit, that has also to travel another 2 years. We do not limit you from making a withdrawal, but like you've already highlighted, there is a withdrawal, an exit fee on the amount you are withdrawing, which we say that it's 2% for the first year and 1% in the second year, assuming you're withdrawing in the second year. So we do not limit you from making a withdrawal, but first we want people who have a medium to long-term objective to invest in that fund. Like we've already highlighted again, that fund is a medium to long-term fund and it's marked to market. So if you do not have that ambition or that goals, please consider the Cash Trust AMC instead. Thank you.
Okay. Would you want to?
No, that's
okay. I've seen a number of questions also on switching in between funds. So if you could kindly explain, if I want to move money from the Stanbic Cash Trust to the Stanbic Cash Trust AMC, or if I want to move money from the Stanbic Income Fund Trust AMC to the Stanbic Income Fund Trust, the main fund, can you please explain? I see that just before you come in, I see the numbers have dropped from 700 to about 500. So it means that a lot more people have, not a lot more, some people have dropped off, obviously to attend to other things. So we will have a stop at 12:30. Sorry, 11:30. 11:30. Hopefully we would have dealt with all your questions and then we can move on. Thank you.
So, to answer your question, yes, switches are possible, and it can take the form, like I mentioned, from either the cash trust main into the cash trust AMC, or income fund main into cash trust AMC, or opposite, from cash trust AMC to income fund main. If the movement is from any of the main funds, please know that it will come at mark to market. So it will be as if you're making a withdrawal. So we'll let you know the mark to market value. Once you confirm, then we move that equivalent unit to the cash trust AMC. But assuming you're moving from a cash trust AMC to the SIFT main, because cash trust AMC is already at amortized cost, what you see is that we will move into the SIFT main for you.
Okay. There was something I saw I wanted to ask on. Escape me. Oh, okay. So there's Ebenezer asking, please, I asked a question on how one can invest to enjoy compound interest on the cash trust AMC.
So when it comes to investment, if you want to enjoy compound returns, it's really the frequency of the deposit that you make. So the more frequent you make deposit, the more the money can grow faster for you. So whether you want to do weekly, monthly, or even daily deposit, the cash trust AMC offers you the opportunity to do that. So if you want to enjoy really decent compounding values, we can definitely look at the frequency of deposit, either weekly, daily, or monthly. Thank you.
Okay. I remembered what I was going to talk about. So I have a few people who are asking about the calculator on the app.
Yes.
And then one is also asking, Francis Kofi is asking, how long will it take for 1 million investment to become 10 million?
Okay. So, like we've mentioned, if you go to the SIMS app, there's a calculator function in there. Now, there are about 4 or 5 functions that you can actually do with that. Now, for the question that has to do with the investment target or investment outcome, you're looking at, say, 1 million or 10 million. You need to input that figure in there and it will give you a particular balance at the end of the period. So let me just do one for the benefit of the people who are here. Give me a second, please. So for example, I want 1 million CDs and I have, say, 10 years to invest, and the average interest is around, say, 12.5. What I should be looking at investing monthly is around 4,200 CDs. So with investment, a key part is the time, or time plays a really important role. So for example, for the same 1 million, somebody who has, say, a 20-year horizon will probably need, say, 2,000 CDs on a monthly basis. If you have, say, a 3-year horizon, you probably need more money to do that. So I would strongly encourage people to download the SIMS app, go to the calculator session. There's various ways you can play around with. You can even look at the interest rate required, the investment monthly return that you need, and everything like that to determine your investment objectives as well. Thank you.
Okay, so with the SIMS bulletin, monthly bulletin, with the fact sheets that are shared, you would have a view of how the fund has performed on a monthly basis, annual, over a 5-year period. So if you get that rate from there, what you can build an expectation around it, and then you move to your SIMS app, put in that interest rate, assume, or you already have in mind your goal of what you want to meet. You can put in that goal. So for the one I read out, his goal is 10 million and he has 1 million now. So you can play around with the interest rates, and you would see how long it will take you to get there. And if that doesn't work, it can also allow monthly deposits, which can get you there faster. So you can actually have all these resources and check how long it will take you to meet your goals. Please, is the interest on cash trust fixed? That's from Michael Afari. I've seen a number of questions on interest rates as well, whether the interest rate is fixed on our funds. So Brenda, I think you can address that for us.
Thank you. So to answer the question in another way, so your fund is actually like a bucket, and in that bucket we put a lot of stuff in. So you put different stuff in the same bucket, and at every point in time there's an investment that is maturing, and at every point in time too we are putting in new investment. We recognize the fact that interest rates move very quickly. To be conservative, I could say that interest rates move on a weekly basis through the weekly auction that Bank of Ghana does. Coming from this year, from January to date, we have seen that interest rates have moved from as high as 29%. We are currently sitting at 12% maximum. What would happen is that if we had bought a security or an investment at 29 and it was going to take about 6 months to mature, it would have matured by June. And by June, if interest rate had fallen from 29 to, let's say, an 18%, the proceeds we got from the maturity would have to reinvest, and we'll be reinvesting at the 18%, whereas we bought at 29% some 6 months back. This shows the dynamic of investing in a collective investment scheme. So far as you give us regular contribution and so far as you do regular redemption, these nuances will come to play. The investments done on the fund carry different interest rates. When you accumulate them, they give you a certain return, and that return will keep changing once the fund remains dynamic, where people are coming for their money and others are investing more. So we do not have a fixed rate for the fund, although some of the investments we buy could have a fixed rate in terms of fixed deposits that we buy in the market. But even the fixed deposit, after the maturity has ensued, would have to reinvest in a variable interest rate. So the interest rate on the investment will keep changing once we remain active and we invest on a regular basis for your benefit.
Awesome. So we have 10 more minutes to go. Just before we wrap up, I would like you to share, each one of you, one key thing you want our clients to take away with them before I come to wrap up on the things we want to remember. Just one key thing you wish that anyone who joined this call will go away with.
I think for me, I go to my first point, is that their experience or client experience really matters to us. And we committed to being very transparent with them throughout the whole journey. And so some of these webinars will keep coming, some of these engagement will keep coming, so that we constantly engage you, let you know what's happening. We also want to send you the bulletins, your statement, the fact sheet, for you to keep you informed at every point in time. So if was one key takeaway, is that your experience really, really matters to us, and we do everything to protect that experience for you.
Yes.
Brenda.
Yes. So you know that we are regulated by the Securities and Exchange Commission, and they have some things that we are obligated to do. That is quarterly reporting for collective investment scheme unit holders. But because we like to be transparent and also engage on a regular basis, the reporting has moved from one every 3 months to once a month. So we report on a monthly basis instead of a quarterly basis. We'd like to take our clients through what goes into our investment, why we did an investment that we did, what the economy is actually looking at, what are the strategy we hope to implement in the fund, and what our outlook on the general economy is. So we share these nuggets on a monthly basis. Kindly access your monthly fact sheet on our website. We are very, very interested in engaging you on a regular basis, so you equip yourself with the information that you need as an investor. Thank you.
Awesome. Thank you very much, Desmond and Brenda. I would like to recap the things that we also wanted you to pick up from this session or this engagement that we've had today. And the things to remember and take away with you, first one is that we are committed to continuously improve. And so from our last webinar, we picked up some of the questions and the items you talked about, and also the feedback that you wanted to engage more. And that's why today's session, we had a 30-minute presentation and a whole hour to also address your questions. We will constantly work with your feedback to improve the experience and the services that we provide for you. We want to partner with you and journey with you throughout your financial journey to get you to where you want to be, or even better. Also to commit to be fully transparent and engage you more, like we said. The second one for us is the real-time value and the investment balances. So key takeaways is that we continuously improving to provide you the transparency you need to invest and to take your investment decisions. And therefore, on your statements, currently what you see is the amortized value and the mark-to-market prices. Going forward, and hopefully before the end of this year, you will see the updates that will show you your mark-to-market value, which means that what you see is what you would get if you should exit the fund as at that particular time you are viewing your statement. On the app or the digital channels, you probably will not see the amortized value. But when you download your statement, as shown by Desmond, you would see both the amortized value and the mark-to-market value. And so you may probably not need to call us to find out, okay, today what are the losses? When I exit or when I withdraw, what does that mean? How much am I going to lose? You would see it in real time. Then also the final one is that your AMC subclasses, i.e. the Stanbic Cash Trust SCT-AMC, which receives deposits and also you can withdraw from, does not have the mark-to-market. There's no mark-to-market on that fund. Also, your Stanbic Income Fund Trust AMC, SIFT-AMC, although does not take deposit anymore, you can withdraw, and you will not withdraw at the mark-to-market prices. And so the values will be there, your amortized values will be there when you are withdrawing. So these are the three key things that we want you to take away. Ernest says, my questions were never answered. We will definitely answer them in the chat box. I'm sure one of the SIMS reps will pick that question up and will respond to it for you. It's 11:26. We want to say thank you very much for making the time, spending the time with us. We still have over 400 clients online, and we are very grateful for your time. Our feedback link is in the chat box. If you're using your laptop, there's a QR code on your screen, coming up on your screen shortly. Please scan it for us. As we have proved, when you speak, we listen, and we put in the necessary initiative and actions to engage. So please don't hesitate to give us your feedback. We do consider it as a gift and to help us to continuously improve on the services that we provide to you. So please scan the QR code, click on the link in the chat box, and please do give us some feedback. Thank you very much for staying with us in this past 2 hours? 1.5 hours, and educating yourself to take better and more informed investment decisions. From the Stanbic Investment Management Services family, we say thank you and see you again. Maybe next year, so Christmas. We say Merry Christmas, isn't it?
Happy New Year.
Have a Happy New Year. See you again. Bye.